is ripping.
My tummy hurts.
Pretty good, right, man?
What's going on, people of YouTubes? It's Nick with Off the Chart Trading. I will be doing the nightly recap for Thursday, December 9th. I figure we start with the profile because some days it's more useful than others, and I think it's good to add the element of time because that's basically what the market profile is you're adding time, which how long do we spend at a specific level, and then you're also adding volume. So basically market profile is volume profile, and you just sprinkle in the time. Once again, as usual, I kind of oversimplify things, but I just wanted to start here because, you know, if you were just looking strictly at price action today, it felt like a pretty bearish day. But when you look at, structurally speaking, how today went, it was actually decent. We did see a little weakness into the close. We did go out near the lows. The end period is after 4 p.m., so that last 15 minutes, we did end up seeing a little lower prices. We ended up going out at 46.65. Keep in mind, I have this set still to 4:15, so obviously if there was a little more action after that, it would have taken place in the overnight inventory. But the main thing I want to start with is kind of how it's been building out ever since, what was it, Monday? We had Friday deep selling. I talked about this on Tuesday. Complete 180 all the way up, great day, and then boom, a gap up and just straight continuation. So after you have like a 200-point move, what do you think is going to happen? Obviously, we're going to consolidate. The market's got to catch its breath. It just ran a marathon in a very short period of time. And that's basically what you see here is balance. It's basically almost overlapping. If you focus on the part I just highlighted, the yellow part, this box, is the volume area. So you basically are overlapping for 3 straight days now, all the volume. Well, I should say 70% of all volume is within that area. And then you start seeing some, let me switch to this. I just downloaded that little Epic pen. It's free. You guys can grab it online. Just go to Google, type in Epic pen. And I thought it'd be kind of nice to highlight things and use that. We use that during our live sessions for GoToMeeting, which is pretty cool to be able to highlight and just, draw lines and stuff. It makes it a little easier, especially when you're trying to drive home a point, being able to visually see, balance and then, basically drawing those lines I think are useful. But anyway, after seeing that today, there's some key levels. I talked about them in today's session. Is the red is where for each session is where the top 30% of all volume was done. And you'll notice a pattern. It's all around the same area. And you have the most time spent at 46.85. You have VPOC a little above that. Next day, 46.85.75. So what, 3 ticks off? Technically, if you drop down a little bit, it's pretty darn close. And then you have today, which you would consider a fairly bad day. I don't remember off the top of my head how much the ES was down, 25, 30 points, maybe a little more at the lows towards the last part of the day. But 46.83.50. So, if you were to average all of those, it's safe to say it's about 46.85 in that. And then we zoom out and we can see over here, the most volume has been traded in this area. So just something to pay attention to, because when I look at the profile, I wouldn't consider today a bearish day. You look at a daily, candle, and it's going to probably look pretty bad. But when you see that majority of the day was spent up here in the most volume, the most time, we for the most part spent more time above halfback than below it. You got VWAP above it. So the 3-4 points of reference that I look at during the day all happened above halfback. Once again, that tug of war reference I talked about in Tuesday's video. And yeah, we got a little weakness at the close, but once again, the bulk of the day was spent up here. And that's one thing that you can get from the profile that you can't really get from any other software, because a regular bar chart, candles, whatever you look at won't show you this. So, you just hear that the ES is down 30 points on the day. Oh, must have been a pretty bad day. But then when you look under the hood, it actually wasn't that bad. So I just wanted to show that and start here, because I think, certain days, if I looked at just this today, I'd say, yeah, you saw a little selling probably into the close, but the majority of the day, stayed within balance from these days. We didn't technically break out of balance, but we'll just have to see how we go into tomorrow. So what I get from today's action, and this is obviously just one man's opinion, is you saw a little bit of selling, more profit taking than anything before the CPI data tomorrow. Does somebody know something early? Is it going to be worse than we think? Is it going to first, because if the CPI data tomorrow is, I don't know if I don't have any of that stuff in front of me right now, but let's just say 5% is what it's supposed to be at. It goes to like 8, 9, 10% or something. The market's it's gonna get hit pretty hard tomorrow, because it's basically forcing the Fed to act quicker. Because it already seems like they were going to be quicker because they kind of removed the word transitory from their vocabulary, and then you add more confirmation that inflation is still here. I'm in the camp that I still don't think, 6 months from now, exactly a year from now, I don't think we're going to be talking about inflation, not to the same levels. I think some of it's transitory, and I think some of it is here to stay, like wages and so forth. But I'm probably the last person to talk about that type of stuff. It is out of my wheelhouse, but obviously as a trader and keeping up with the broader markets, I do have to listen to sound bits and read some things to keep up with it, because obviously it's not good to be blindsided. Like, why are we falling? Even though I always say the why doesn't matter, sometimes it is good to gauge how something could be more serious going forward. But anyway, here we are building out overnight inventory, which for me starts at technically it would start at 5:15, but I'm just going to round up and say 6 p.m. And it's building out on the lower end of the profile. I'm not putting too much weight into it. ES is basically flat from where it opened, up about 1.5 points here. So not too much to worry about. We'll have to see how we open. But I think this kind of sums it up, that we pulled ourselves up after that selling we saw. We've been balancing for 3 days and, AKA taking time off the clock, waiting till Friday. So here we are tomorrow morning, CPI data. And we'll just have to see how the market, I can make a point that if it's lower, then we shoot up. We probably break out of balance and we end up going much higher, maybe retest all-time highs. I don't know if it'd be tomorrow, but probably before the end of the year. As you guys probably remember on Tuesday's videos, I talked about at least potentially retesting the highs or taking them out and going up to 47.50. If inflation's going to be front and center and that's an issue, we're not going to see new highs. So we'll just have to wait and see. I think that's why the market's just been, taking time off the clock, and kind of, you saw a little bit of selling today. It was definitely more violent in the NQ and in the Russell, which is weird because normally if the NQ is getting pulled down pretty hard, normally the ES will go down too. But the Dow was up today too, so it was kind of a divergent / kind of a sloppy day. But in the room I talked about, I'm not too worried about heavy shorting or changing anything because of this. So I just wanted to start there, basically saying that's how I started my day. When we did have those swings early in the day, it was still within this range, and it really didn't, phase me too much. But anyway, I just wanted to start here because I thought it would be important. What was I going to say? We can look at, I was looking at my Lucid. I ended up getting out of some shares on, I think I mentioned that because it was on, was it Tuesday? I think, yeah, it was Tuesday. I already talked about this. We saw some more selling today, pretty bad. Basically the same spot after hours, down a few cents, but $8 move is pretty bad. I was looking for it to potentially hold the 50. Didn't technically hold it. We'll have to see how it is tomorrow. Honestly, I've been shocked that it hasn't retested its 50 or gone back to the mid 30s after this massive run. But I think that's just showing that a lot of institutions own it. The other thing is too, it's had some FUD. You had the CEO sell some shares last week or earlier this week. You got the subpoena, and then you would do an offering. So you got like a cocktail of FUD that most people aren't going to like the taste of. So it's not really too shocking that the stock's down almost $20 in the last couple days, couple weeks. So we'll just have to see how it goes. Like I said, for me, it's a long-term hold. I still have, I think, about 1,000 shares at like $18. So even here, I'm up like 100%. So I'm not really too worried about it long term. Wasn't really meaning to talk about Lucid, but I guess that's what it defaulted to when I switched to it. Main thing is just look at the recap of the indexes today. I mean, not bad overall. Like I said, yeah, to think that we ended up seeing a little bit of selling after a massive move, like I said, 150-point move or whatever it was over the last couple days. To see a little selling today, I don't think it's too crazy. We're still stacked positively. Everything still looks good. Like I said, NQ a little weaker today. Did come back down. It did move and it closed right above its 8. So structurally speaking, it's still fine. One thing, I'll wait till I switch to my internal screen to go over that. But I did put on a short this morning on the NQ, and I think it's important. And let me see if actually, I think it'd be actually probably a good idea to actually show you exactly what I said. Like I said, I don't plan most of these videos. I kind of do it off the cuff, but we'll take a look. So for Slack, it would have been today. And I basically said, it doesn't feel like it's heavy selling to me. This was at 10:35 this morning, so pretty early in the day after the first hour. Like I said, and when I say feeling, I follow up with, the tempo of the overall market, which that's not something you can really teach. That's just screen time, the overall speed. You're in a car, and if I'm going 90 miles an hour, you can feel that. If I'm going 10 miles an hour, you can feel, you might not know the exact speed, we're going 86 miles per hour. You might not know that, but you can tell when something's going fast or slow. And that's the overall tempo of the market. The ticks help with that, and then just a lot of screen time will help you with that. But it didn't feel like it was going to be a heavy selling day. But like I said, a snowball can turn into an avalanche. It can come out of nowhere. So I just wanted to be safe than sorry and put one on. And I did close it at the end of the day for $1 move. Like I said, I get in the habit of just making it like a one lot for myself, kind of copying what Ed's been doing, just so people don't get a little too crazy and decide to copy and paste the exact trade. So I made a lot more than just $1 per contract. Obviously, I had more. I had 10. So like I said, I made about $1,000 off of that intraday hedge, which is nice. Like I said, it's offset the overall selling for the day, but not going bearish and not changing course or anything. But to be able to capitalize an extra $1,000 I didn't have, that I made literally in one day. Pretty quick and painless. Doesn't always work that way, but it is nice when it does. But I figured showing that would be pretty good, so you can kind of see what exactly I mentioned during the day. Obviously, that's for our members. Russell was also fairly weak. This is pretty bad. Back below the 34 now. Everything was already switched negatively, but since we dropped below price, my candles went red, and then here we are red again. So keep an eye on the Russell. We've talked about it before. That so goes the Russell, so goes the overall market sometimes. It's not always a lead indicator, but you can kind of go back and cross-reference when this hit all-time highs and what happened. And it almost gave like a 2-week notice before we did end up seeing some selling. So normally if there is weakness in the Russell, a kind of risk-on trade, going away, that's normally a sign that's the first place that money gets pulled out of. So having today's action and then a little continuation, which I'm not going to count really a big move down, 3 points after hours, it obviously doesn't look as good as the NQ or the Russell or even the Dow for that matter. Dow actually was pretty strong today, getting after hours here, that 821.34 buy arrow. So it's actually pretty good there. We'll just have to see how it goes longer term. But first 824 and 34 cross in a while. Yeah, I mean, the last one we got right over here back in June, and you could see there was good follow through. So, not that you ever want to use a buy or sell signal to the T, I see that, so I have to copy it or whatever. But, sometimes these crosses and the overall trend of the market, these are normally good indicators if you cross-reference, especially on a weekly or daily chart. I think it's pretty useful. Also included for free for members on the site. I give you guys all my indicators. What did I want to look at? There's no specific stocks today, but I guess we can take a look at the internals. Overall, like I said, not the best day, especially being in a mix of, risk on trade. Not that a lot of my stuff is in the Russell, but it is, I consider it smaller cap, risk on trading. You have that, and then the other side of it being tech. I got like a double whammy today where I felt like the market was falling apart. I mean, the NQ was down at one point. I don't know where it finished off the top of my head, but I think it was down like 250 points, give or take. And that's a pretty significant move, and there was a big detach because you see green and you see red. So overall, the Dow was up on the day, but I think that was the only one that finished green. Everything else, the ES was down like almost 30-something points. We're also down a good amount, and then obviously the NQ. Cumulative tick, like I said, once it puked, it just didn't really look back. VIX was straight up for the most part. Breath ratios were not that bad. Obviously not as good as the previous couple days, but not horrible. Not 10-1, not 15-20, nothing too crazy. Once again, kind of going with my whole, there was selling, but it was slow and steady, orderly selling, which honestly I personally hate. I'd rather have the rip the Band-Aid off type selling rather than dealing with the, is this an actual trend? And then you're not sure when to go short. But I will say My gut told me to put on a hedge, which sometimes with trading you don't want to. It's right around, I guess, like what I showed, about 1035 or so. So somewhere in here, I decided. I don't know if it was the 82134 cross or something, but I just, like I said, it looked like a balanced day, which if we look at the profile was pretty much for the most part not a complete balanced day because we did have a little excess on the bottom, but overall I would consider it a balanced day in the sense of where we spent the most time in volume, right in the middle there. But you know, noticing the detach from the Dow and the ES, it was definitely much more. It was weaker on the NQ and tech in general. So I just followed that idea, and I said, if I am going to be short, the Russell would have worked probably even better because percent wise it was down lower. But I don't know, for whatever reason, I just wanted to go with the NQ. Like I said, doing this for a while, sometimes there is gut. You don't want to always trust your gut, but the more you look at something every single day for 10, 11, 12 years, you kind of start going with your gut. So it doesn't always work. And like I said, I wasn't 100% sure. I didn't really feel like I didn't see anything in the sense to go short, but it was pretty good. And I actually got out. I put a stop right about here. So pretty darn close to the lows of the day because we did end up rebounding. And then we did see a little bit of pukage. Got new lows of the day. And then we ended up right. That was basically right at the close. I got out at, it was right around here. I think it was like 305, 310, whatever it was that I got out. And I'll give you the breakdown for that. One, it expires tomorrow. And I personally don't like holding anything overnight that expires the next day. You are literally not even flipping a coin. You have like depending on, obviously, each trade is going to be different. But if you're in the money by a little bit, it's a little better. But with theta and everything, if NQ opened up plus 100 points, instead of being up 50, 60%, whatever I was up at the time, I would probably be break even or barely up. So I'm one of those people that I'd rather pay myself. It was, and like I said, following through to the plan. I wrote that it was an intraday hedge. What does intraday mean? For that day, for that specific day. Oh, I'm up, 50, 60%. Let me hold it to tomorrow because maybe I'll make more money. That is the death of traders with that mindset. So whatever the plan initially was, from A to Z, you have to follow it. That's how you have discipline. That's how you stay in this game long term. So it was an intraday trade going into the last hour of the day. I was at the lows of the day. It just made sense to cut it because I mentioned in the room, I'm like, I wouldn't be shocked. Maybe around 3:30 going into the last hour, we could see a little volatility one way or the other. Obviously, it was a weaker day for the NQ, so maybe we would see more selling. But nothing's worse than having a trade that works all day and in the last 10 minutes, your profits go away because it shoots up, or vice versa. You're long, 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 and then you have that red candle. Or you're short, 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 and then you have a big green candle. That's annoying. It's almost you call yourself a sucker or other words. I don't want to get banned. So I'm just gonna say calling you. We use that word a lot in the room. You sucker. Like I said, I guess it's more of a PG thing to say. But my point is, going into the last hour of the day, the trade was working. I can't ask for a better place at that time with the information I had to sell at the lows. I sold at the lows. Looked like it was the right thing. We did get a little pop. Yes, we got more lows right at the close, but I'm not going to hold a hedge that expires. Granted, I did have till 4:15. Like I said, you don't want to time the market, is my point. And especially with lotto, not really lotto, but something that expires very soon, it's best just to take your profits and run. From experience, that's what's worked for me. Yes, we could open up tomorrow and the NQ could be down 400 points, and instead of making $1,000, I could be up $5,000 or $10,000 or whatever. And sometimes you'll get lucky like that, but I guarantee the more times you don't follow your plan and you try to just kind of gamble, there's a reason the house wins the majority of the time, and in that scenario, the house is the market. So just keep that in mind. Like I said, Bitcoin got hit pretty whacked. The dollar kind of holding up. I mean, it's not crazy, and it's understandable, kind of like how the market was up for 2 days straight, nonstop. This is a big move for the dollar, so the fact that it's consolidating isn't too crazy. I'd prefer it to go lower, but it does help in the short term with inflation fears. Advanced declines, like I said, we're doing pretty decent, then kind of gave it up. Got that same type of rainbow look. TNX, no one's really talking about its drop, so I guess that's overall good for tech. Tick distribution was more bearish. Oil got hit today. I figured after that, was it Iran, Iraq, wherever it was, whatchamacallit. Anyway, they had an explosion at one of the refineries or whatever. I assumed that was going to help oil. It didn't, so I'm glad because I was actually looking to potentially maybe take on some XOM calls that would expire tomorrow, and I decided not to. Even though there was a little gap up, a little pop, it seemed to be pretty short-lived. Bonds, ZB, picking up here after hours, so that's something to keep an eye on. And the yen. Mainly a risk-on trade or risk-off trade, depending on our markets, almost like an inverse. So if you see this potentially heading up, normally that's a sign that money's flowing into it as a hedge against our own equity market. So something to be aware of. It's good to keep an eye on. I'm not a currency trader, but the more information you have to cross-reference different ideas, like I said, going back to the beginning of the video, you don't want to just go by price action. The Dow was up 200 points today. Green is good. You don't want to trade like that. So the more points of reference, you don't want to overload it. Like I said, most traders spend years trying to play that balancing act of, analysis paralysis and a minimalist, and you find yourself in the middle of that. It doesn't happen overnight. Everyone wants instant success, and everybody wants to exactly know what book to watch or read, or what video to watch, and what series to do this, so they learn how to trade, and you just get going. But it's not cookie cutter. It takes a lot of time. Everything you're looking at right now took me, years of trial and error, plus and minusing, adding certain things, removing certain things to get comfortable for how I personally read the markets. And once again, just one person's point of view. But anyway, that's pretty much it. Like I said, I'll focus on the CPI data tomorrow. There's really no reason to look at any other holdings that I have because it's all going to be dependent on tomorrow. I've purposely planned to be fairly light going into the rest of the year. I'm not trying to be a hero. I've had a lot of good day trades and swing trades this whole week, from Disney to A-Firm to some hedges like we did today with the Qs. So I played IWM yesterday, made some money on the way up and stuff. So the shorter time frame trades, I don't want to say scalps, but 15-minute holds, 30-minute holds, couple hours. Apple was another good one the other day. Getting in and out and making your money seems to be the best option in this market because you're up. The NQ and Russell are blowing, going out. They're going into the, they're going to the moon yesterday, and now they're crashing back down. So don't get trapped. Be aware of what market conditions we're in and be able to trade within those market conditions. Hopefully it's been helpful. If you guys need us, to reach us out offthecharttrading.com or check us out on Facebook. Have a good night, guys.